Hey, what's up, everybody out there? My name is Ruben Rodrigues from Tenacious Tribe, and here I am once again to pursue my purpose, my mandate here, which is to technical and price action analyze trading assets of the day, of the week, and the mandate I got today, the order I got on my book today was for Koss Corporation. Before proceeding, I hope you guys have had a very nice and profitable trading day. No clue how the stock market performed today. Haven't seen it yet. Just ran through my usual. Okay, so it's another nice day. I see. Yeah, not so. Yeah, not so much. I mean, as long as it doesn't go down nowadays, it's not too bad. As there was no interest today on the stock market. Be very careful still. Very careful. Confirmed downtrend, market trading below the 10 EMA on the monthly time frame. This is a bear market. Still, yeah. don't let this uh, don't let this misleading bullish candle um, make you lose your discipline, your focus, or perhaps sell you stories about what's about to come from stock market. Be very careful. It's not a fantastic environment for you still to trade. Manage risk if you're trading. Yeah, I would say trade against or trade in favor of the major trend, which is the bear trend. I mean, I would also not advise anybody to go short on a stock market. I don't like it. It does not provide for good risk reward scenarios. I mean, you can lose 100% of your stock when you're bearish, or by the same token, you can make 100% of your value when you short a stock, but you can make virtually unlimited profit when you trade on the long side, or you can make virtually unlimited loss when trading on the bear side, on the short side. Therefore, I mean, this is not the kind of environment I like to trade in. Of course, if you're a seasoned trader, seasoned investor with a back-tested strategy, with sound risk management principles, with an edge to play out in the market. And if your trigger has just been set on a market, just feel free, go ahead and at your peril. Otherwise, I mean, for the average investor out there, just the effortless and fantastic and unbeatable, unmatchable dollar cost averaging strategies should do wonders for you. What does it mean? Markets here, you buy. Markets here, you buy. Markets here, you buy. You buy, you buy, you buy, and you buy, and you hold forever, or until you need to withdraw your money. Ideally within 10, 20, 30 years. And this strategy has been returning an average of 8 to 9% over the long term to investors out there. And it's effortless and it regulates your emotions. It does not make you feel you're missing anything when a stock is going up, because you're actually participating in bull markets, and it does not make you feel like should panic sell like in bear markets, because in bear markets that's precisely the market circumstances where you'd be getting more of the asset you're buying, the S&P 500 or whichever fund or index you're tracing, at a discounted price. Think about it. Right now, you're buying the S&P 500 at a discounted price in comparison to where it was back in July onwards. So this is, in other words, the sales season. That's why this strategy is so beautiful, profitable, with reasonable returns, effortless, emotional, a good regulator for emotions. It's just yeah, hard to beat this one. And yeah, bear in mind also, like there's a lot of more people out there, a lot of very smart people out there who getting paid FT amounts of money to beat this strategy, to beat the market, and they've been failing miserably over the years. They might pick Cathy Wood, for instance. She might be able to beat the market for a couple of years, as she was able to, like in an outstanding way, like Bravo. But look at what happened over the past 2 years. Completely slammed, completely below the benchmark. Um, that's why the strategy is so beautiful. It's very hard to beat this strategy. Even the professionals have a very hard time in beating this strategy, and even the professionals more often than not fail to do so. Getting back to our asset of today, I saw there was a lot of interest in Koss. Koss Corporation. What? Oof. First comment: Why would you get interested in such a stock? Like this looks like this looks like the closest possible from casino gambling. This looks horrible, horrible. Why did you trade it? Why did you get interested in it? This looks horrible. I don't even have like enough information for price action or in the monthly time frame. So I have to. It's okay. There was something very strange here back in 25 January 2021. Perhaps something like investors emulating what happened with meme stocks like GME and Nokia, which was the other one, AMD. No, not AMD. I cannot recall, but perhaps you guys trying to emulate what happened in this stock. This is not nice. Yeah, I mean, unless you really know what you're doing, you really know what you're doing. Unless you really own your craft and you really your numbers in the tip of your tongue, you really have your mindset straight, your discipline, and all that. And unless your edge has played out, or your bicenal has just played out, you should trade it. Otherwise, I mean, just stay away from this. This is horrible. Um, what can you draw from this chart? Perhaps a short squeeze here. Yeah, look what happened right afterwards. And a lot of illusions afterwards. Bull pump, bull pump, bull pump. But like, look at these longer wicks. And like the bears were like in complete command here all over the time. This is the place where the buying pressure came from. What's wrong with this? Oh no. This is the place where the buyer pressure came from. Uh, oh, there you go. There you go. This is where you should draw your demand zone. Then what is I mean, you can even draw the same technical analysis principles. Look at what happened here. A lot of people, a lot of buyers participating in this short squeeze. A lot of people buying here, thinking that this asset was going to the moon. This equity. Suddenly bears pop in. I don't know if there was manipulation here or not. But what you see after with these weeks is something very clear. There were a lot of people buying here, and they and I can imagine they went through hell like when they saw this red candle, and whenever they saw price getting back again to remotely their break even or remotely the price they paid for it initially, they were craving, they were praying to God, like take me out of this position, take me out of this position, please. I want to get out right now. With the least amount of damage possible. That's why you see these sort of candles here, these sort of upper shadows, seller pressure, seller pressure. People bought here and are craving to buy here or the closest possible from their open from their break even price, so to say. Um, I mean, yeah. What can I tell you? There was perhaps a very small percentage of people who made money here. Uh, what happened with this candle, with this candle, which is something also you saw with GME, is just like not beautiful. Come on, perhaps a very big group of investors colluding to keep on buying and feeding themselves on a loop with the story that perhaps the stock was going to the moon, buying, just to see selling pressure uh, at this level. Technical analysis equally respected. Same here. Same here with this candle. Same here. And what else? And here perhaps. I mean, you see a 42% gain over the past week. I mean, don't take this bait. Just I before I proceed in analyzing what are the upcoming support and resistance areas, I think trading the stock or what's happening in the stock should help you to draw a very valuable lesson for your trading career, so to say. Um, Trade what you know. Trade a strategy. Uh, Backtest your idea. If you think you have an edge, let's say, if you think that you can make money out of short squeezes, or trading stocks that are making a 20-day high and closing, okay, run the numbers down. Just test that idea massively and go through it. Try to ascertain what's the average expectancy return for any given trade. What's the average drawdown for any trade? What are the best, the most propitious market conditions and to yield you a profit? Which markets should you trade? Backtest over and over, stock or by stock by stock by stock by stock. Now I would even say backtest it manually, because when you do it manually, you sort of have to go through so many charts that you start getting like uh, immersed into all these tiny hunches as to small things that can improve your initial idea to trade a 20 day eyes, for instance, and then test the improvements you come across with or the ideas you come across with. Test everything. Then you can ascertain which type of markets you want to trade. Uh, if you want to be a trend follower or a mean reversal trader, if you want to trade on a multi-time frame, weekly, daily, intradaily, yearly, God knows if you don't want to do it at all, or which stop loss should you have? How can you manage your risk properly? How many setups should you expect every year? You need to know these numbers. It's very important for you, because unless you know these numbers, you're always going to live in agony, because you're never going to know if the buy your placing is actually has a good odds of yielding you a profit or not. Of course, I know also that past results and past numbers are not 100% accurate predictors of what's going to happen in the future. But I would say, I would counter that by saying that human emotion is what you see here. By the way, it's present in every chart with volume, of course. Um, it's never gonna go away. It's still here. It's never gonna go away. People who bought here are gonna have the same sort of emotions uh, that people who bought in similar circumstances in previous bubbles or in previous short squeeze, and they're gonna have the FOMO, for instance, and the people, those same people, when the price gets back to their break-even level, are going to feel the same sort of emotions that these people are feeling here. That they want to sell, they want to get out of the trade right now. They're done with this experience of it's not going to the moon. They just snap out of reality. So they want their money back, and they're very craving to buy here, or the panic people feel when they see this red candle. This is what technical analysis is based on. That's why it excels so good at reading what the charts have to say. That's why I rely on it also. Although I do read and I do try to get myself informed and immersed also into fundamental analysis. I keep on delving into technical analysis. In short, run your numbers, know your craft, know exactly what you're doing, and when the moment comes, even if you get this very big candle, the odds are, or if it does, there's two scenarios. One, you're just the strategy that you're mastering, that you're back tested, that you've uh, played ins and outs, that you think through and all that. Either that strategy has given you a buy signal or a sell signal whatsoever, and you enter or you exit, or and yeah, if in case you enter, you do have a very nice odds of making money here, because you know exactly what to do, when to buy, when to sell, which stop loss, uh, position size, all that. Or you did not receive a buy signal from your strategy, and you just leave this chart away and go find another chart which has given you a buy signal, where your edge has good odds of playing out and yielding you some money. Otherwise, it's just gambling, like purely. That's it. That's why I think GME, for instance, is a very good opportunity for investors out there to learn about the markets, to learn about emotions, about the FOMO, and can remember it's going to the moon. It's going to the moon. I better enter, regardless of where the price stands right now. And then the panic of seeing this an Akin red candle of this size, and the hope that the price would get back to these levels, and the craving to sell for a break even. It was all there. It was a major learning experience. But okay, getting back into Koss. Okay, you see another upper shadow. Stuck in a downtrend after this short squeeze. Okay, here it showed first signs of finding a bottom here. Bottom was by coincidence in the demand zone of our short squeeze or whatever this was. I'm not sure it was a short squeeze. And here we got our support area, which was respected by the price. So as of the moment that we got this gigantic bullish candle, we can already draw a demand area. And yeah, we see that was respected perfectly because the price entered the downtrend after this. I don't know what to call it, breakout, insanity, irrational exuberance. Anyway, the Manzano was delimited and it was respected by price. Check this hammer candle, small hammer, very discreet, but good enough to establish support. You see already that there was the first breakout and close from this 10 EMA on the weekly time frame, which is roughly the 50 on the daily. By the way, for the guys who are not following technicals so thoroughly, if the stock is trading above 50 MA, then you don't have a downtrend or the ranging market perhaps. But I mean, this is the official benchmark. There's more to it, like where's it sloping to, upwards or downwards? Where's the 200 EMA? Where's the price in relation to it? But as a rule of thumb, price above the 50 MA on a daytime frame, and not downtrend anymore, at least. So we got the first signs here of a shift of a change of structure, and then you got this bomb, this gigantic candle, which is telling us that downtrend has come to an end. What can I do with this? Let me draw some more levels. This is a level for sure. I love these shadows because these shadows are like very good signs of places where the bears are hidden. And yeah, okay. What can I do with this? What can I do with this? I don't like these setups. Once again, it's still gambling for me. But I mean, if the price breaks out from this upcoming resistance level, maybe you got the trade here. Risk reward ratio. Risk reward ratio is ridiculous. Just don't trade this. That's I have to say for you guys today. Don't trade this. Leave this to the gamblers. Develop your hedge. Develop your strategy. Run your numbers. Become a master of the strategy, and just refrain from trading this unless you're roaring kitty or the fucking value, and you're the one causing this or of instigating or flaming up this short squeeze in first place. That's it, guys. I don't have anything else to add to this technical analysis. This analysis is not a good risk reward. This would be the level we'll be aiming at because you're going to see bears here. So if you buy here, you're going to see resistance here, bears here. It might keep on going through. We don't know, but you're definitely going to see resistance here, obstacles. Where will I buy it? This is just ugly. I'll just buy some serious stocks or commodities or even bonds. That's it, guys. Nothing else to add. Hope you guys have enjoyed this episode. Cheers. Responsible trading and no financial advice. Make sure to discuss all your trading setups or investing intentions with your financial advisor. That's it for today. Cheers.